What's up, millennials? So ChargePoint has been public for about 2 weeks now, and they already had their first earnings call yesterday. I listened to that and I did some additional research which I would like to share with you in exchange for about 10 minutes of your time. And I'd like to touch on 5 different things. First of all, I'm going to give you my general feeling of the earnings call. Then we're going to take a look at their current market cap as well. We are going to take a look at the revenue of 2020 and 2021, the expansion within Europe, and lastly, some technical analysis. So I'd first like to talk a little bit about the general feeling that I had about this earnings call. And I actually liked it, and it might sound a little bit weird, but I think this is more and more important to me, just the way how I feel about a company, about the team. And it is why I just love a company like Lemonade, for example, and why I love an altcoin like Polkadot, because I just like the feel of the company. I like the feel of the team behind these companies and behind these altcoins as well. I think CEO Pasquale Romano and the CFO Rex Jackson sounded very comfortable as well during the earnings call. They've probably had many earnings calls in the past while they still were a private company, of course. And yeah, they've been around for quite a few years, like 13 years almost. So I think they have quite some experience as well. And personally, I've been at many other earnings calls, and I think that many of these CEOs, CFOs are stumbling quite a bit trying to find the right words, don't know really fully what to say. But I think that the CEO and CFO of ChargePoint sounded quite different, sounded quite confident in my personal opinion, and that makes me a confident investor as well. Then topic number 2 is the current market cap of this company, because some people might not be aware how big the market cap is at this moment. According to the earnings, they said that there are 277.8 million shares outstanding right now. This is excluding some warrants that are issuable if these warrants are exercised at some point, and they're probably going to be exercised in about 2 weeks because the price is probably going to be above $18, and then the company can actually make people exercise their warrants. So let's see if that is actually going to happen. But for now, let's take a look at what happens if we plug in these numbers. So 277.8 million shares. That is going to give you, with the current price of $27.45, difficult to say, which is the current price. It actually dipped down a little bit, as we are going to see in the technical analysis part. So we currently have a market cap of $7.6 billion, and we also see that they have currently $615 million in cash on their balance sheet. So the current enterprise value is about $7 billion right now. And if you plug in the same numbers that I did for a valuation video like many months ago, I think like October, I'm not entirely sure when that was, but quite a bit ago, we calculated a midpoint valuation, and right now, based on these new numbers, the midpoint valuation would be $26.28. And well, currently it is actually very close to that midpoint valuation, so that's pretty cool to see. However, and oh yeah, just a little side note, the price to sales ratio, right now they expect to have about $200 million in revenue in 2021. So this year, that would mean that based on the current market cap of 7.6 billion rather, they would have a price to sales ratio of 38, which is quite high, of course. Yeah, a company like EVbox, TPGY is quite a bit cheaper compared to this one. But yeah, it's actually a little bit cheaper compared to what it has been in the last couple of weeks, of course. And let's also take a look at what would happen if all these warrants would be exercised in the next coming weeks. So right now, according to one of their filings at the SEC, they have 25 million shares that could be issuable if all those warrants are exercised. So if you take this number and add 25 million, let's actually do it this way. So 25, 1, 2, 3, 1, 2, 3. That should be the correct number. Yeah, so about 303 million shares outstanding if all the warrants would be exercised. And of course, that is going to give some money as well. So let's pull up a calculator for a second. So 25 million shares, which is going to be multiplied by 1150 per share. So that is going to give you some cash on their some extra cash on their balance sheet. So let's plug in that number as well. That should be it. Yeah, exactly. So that's going to be about $900 million in cash on their balance sheet. So that means that the market cap would be a little bit higher compared to what it is right now, of course. And that is also meaning that the current midpoint valuation is slightly lower compared to the valuation we just saw without the extra warrants exercised, if you know what I mean. So then the midpoint valuation would be $25.06. Then topic number 3 would be the revenue of the full year of last year and also of this year. So last year they had $146.5 million in revenue for the full year, which was almost the same as the year before that, so 2019. But it is actually higher compared to what they had in their investor presentation, because there they said that they expected to have only $135 million in 2020. So that is, of course, good news. With regards to the guidance they gave for the full year, they said that the Q1 revenue was probably going to be a little bit lower compared to Q4 of last year, and that is because of seasonality. And with regards to the full year revenue, they expect to be in a range of 195 to 205 million, so about 200 million for the full year, which is basically the same as the investor presentation, where they said they were going to have about 198 million, so that's pretty good. I'm actually kind of hoping they're lowballing it, because in the investor presentation right here, we can see that they were expecting to have 46% year-over-year growth with regards to that revenue, but of course that was based on a lower revenue in 2020 of 135 million. Of course, now we had higher revenue in 2020 of 146.5 million. So the difference between 2020 and 2021, on the other hand, is going to be a little bit lower, 37%. Yeah, again, I'm kind of hoping they're lowballing it. They did say, by the way, that the guidance does include new product launches. So I'm not entirely sure what kind of products these are, but we're going to probably find out in the next coming months. And just my feeling about all of this, I think that this year they will be able to reach their target of about 200 million. I'm going to be very cautious with the numbers of next year, because they expect to grow next year in 2022 with 75% to $346 million in revenue. That is already quite a big jump. I'm not entirely sure if they're going to be able to achieve that. If they do reach that number, then they're going to definitely have my full confidence in the long term. Then topic number 4 is the expansion, because they do want to expand heavily within Europe especially. They of course have a hefty cash balance of about 600 million of course, to 900 million more or less if all the warrants are exercised, which is more than they net spent in the last 13 years, so that is quite a bit. And they are going to use this cash for expansion within Europe. The focus is very much on Europe. It's also in the questions that were asked during the earnings call. Many people were wondering about that expansion within Europe. You might ask why? Well, they also said in the investor presentation, or actually in the earnings call, that they expect EVs to make up 3.8% of new passenger car sales globally in 2021, with approximately 5% in Europe and 2% in the United States. So in Europe, just the amount of EVs is just way higher compared to the United States. And by 2030, I believe they said that they expect to have the global new passenger car sales 29% electric, even compared to 3.8% in 2021. And if you're wondering about the current situation of ChargePoint in North America versus Europe, they said that from a geographic perspective, Q4 revenue from North America was 92% and Europe was only 8%. And as you can see in the investor presentation, they expect that the amount of European sales is going to go up more and more over time. So in 2026, it looks like almost like 1/3 almost, I would say, is already from Europe. And if you're wondering about the amount of employees they have in Europe, well, they said they have about 100 people in Europe, and I believe they're currently sitting at about 800 people in total, 800 employees in total. And they're actually hiring like crazy, as you can see on the website, especially in Europe. And I believe especially in Europe, they are looking more and more for software engineers. So if you just scroll through this, you just see like, I don't know, maybe even 100 positions that are currently open. I see many in the Netherlands, some in France, some in Reading in the UK, but also of course in North America as well. But yeah, just a lot of hiring going on at ChargePoint right now. And just a quick side note, because if we talk about Europe, we of course also quickly have to briefly talk about EVbox, which is going to be merging with TPGY. I think this makes me even more bullish about TPGY because they are so focused on Europe right now. I made a video about them last Wednesday, so if you haven't seen that, check it out. And then lastly, the technical analysis. Let's very briefly talk about the chart for a second, because we had a very beautiful bounce of a support level, which was created by this low over here back in December. We created a beautiful bounce of this region of about $25. I actually added a little bit to my own position. I think I added about 20% to my position at $25.50. I, of course, alerted the Discord Premium members. And if you want to learn a little bit more on how I buy stocks, or how I buy the dip in stocks rather, please check out my video that I released I think a week ago more or less, where I talk about using support and exponential moving averages to buy the dip. So yeah, with regards to technical analysis right now, we saw that beautiful bounce off that support. We came up. Now we have a beautiful red day in the market because of bonds going up, of course. And it kind of looks like we are finding a little bit of support on this blue box, more or less, that I drew in here. So that seems pretty solid. Yeah, of course, it can always go lower, but so far I do think this support is quite big. This range between like $24.50 and $26, I do think that's a nice level of support. Also, if you take a look at a few indicators, we can see that the RSI has crossed back above the exponential moving average. The exponential moving average has already crossed or is already going back up to the upside. RSI has been very low, and in the beginning it was almost at 20. And yeah, I do think we are very close to bottoming out, to be honest. Also, if you look at the MACD, it seems pretty fine. Yeah, it hasn't crossed back up above the signal line just yet, but yeah, so far I do like it. So we might go down a little bit more to that to this beautiful blue box, but yeah, let's see what happens after that. Now, I will say this, that technical analysis becomes a little bit less relevant in times like these after a SPAC merger, because often we do see a sell-off in the month after a ticker change. And yeah, I'm just not adding more to my position right now because I think it's fairly valued, or a little bit undervalued, but probably fairly valued at these prices. If it does decide to dip to like $20, then I'm probably going to add more to my position. Alright, I hope you found some value in this video. If you did, please consider sharing this video with your friends who are also investing in companies like ChargePoint. And with that being said, thank you very much for taking the time to watch this video. Have a beautiful weekend. Bye bye.